Morning, Professor. Today, I, Nishant Kumar, with my group Ayush Bharat, Bharat Kabir, Krishi Rashmikant, and Patel Devers, are going to present our case study about New York Stock Exchange. So, today we examine a pivotal event in financial history, the New York Stock Exchange trading outage in July 2015. So, this incident was triggered by seemingly routine software update, yet it resulted in a multi-hour halt that markets that reverberated across global financial markets. It serves as a stark reminder of the critical importance of robust IT infrastructure. The NYSE outage exposed vulnerability in resilience, testing, and disaster recovery capability, highlighting the profound, highly interconnected system. As we explore the case study, we will discuss the lesson learned and underscore the imperative for organizations to continually enhance their IT resilience and risk management frameworks to safeguard against similar disruption in the future. So let's dig deep into the enterprise. So the New York Stock Exchange stands as the foremost equities trading platform and the cornerstone of global financial infrastructure. With a combined market capitalization exceeding $28 trillion from its listing companies, the New York Stock Exchange holds a pivotal role in the global financial system. Any interruption in its trading operations can ripple through markets, affecting bank, investment firms, and the broader economy. So this systematic importance underscores the critical need for the robust IT resilience and risk management strategies to safeguard against disruption that could potentially destabilize financial market worldwide. So about the outage. On July 2000, on July 18, 2015, the New York Stock Exchange encountered a significant challenge with an unprecedented full trading halt that lasted for 3 hours and 38 minutes. This outage stemmed from a newly deployed software release on the previous night intended for an industry-wide test. Unfortunately, the update was not configured properly with, with customer gateways, leading to widespread communication failure across the exchanging trades infrastructure. To rectify this, New York Stock Exchange has to take really hard steps of imposing restriction on new orders and canceling all outstanding orders to prevent exacerbating imbalance upon reopening. So now I'm handing over to Kabir.
Thank you, Nishant, and I would like to continue on my topic. Today, I want to discuss a significant event that disrupted the financial and markets and its linkage to our course on high availability and system resilience. So, on this particular day, trading in New York Stock Exchange listed securities worth a staggering amount of $28 trillion came to an abrupt halt for like 3.5 hours. So this incident left traders unable to execute orders, uh, forcing high frequency traders to rapidly adjust their strategies. This timing couldn't have been worse. Uh, Coinciding with market volatility from the Greek debt crisis, raising serious concerns over the New York Stock Exchange resilience and recovering capabilities. So further, this unprecedented full closure of one of the world's most leading equity markets disrupted trading strategies and order flows for countless investors, traders, and firms that rely on New York Stock Exchange liquidity, right? So these high frequency trading operations had to scramble to reroute their order flow and strategies to other exchanges during the outage period. And so, moreover, the root cause of this disruption was directly tied to a failure in New York stock exchanges, software development process, and lack of resilient system design. Specifically, a new incompatible software release was pushed to production systems, I guess, without comprehensive testing and validation of all integrated components, such as customer gateways. Additionally, there was a lack of adequate testing and system integration, insufficient redundancy and failure capabilities, and gaps in change of management and disaster recovery planning. Yeah. So, moving to the next slide. Yeah. This incident highlighted critical violations of the high availability principles we have covered in our course. It underscores the importance of resilient architecture, robust recovery capabilities, and proper implementation of disaster recovery strategies for critical IT services. Uh, the New York Stock Exchange inability to prevent a single software glitch from crippling all trading operations serve as a the stark reminder of the need to rigorous testing, comprehensive change management, and resilient system design. So this was all the root cause and the linkage to our course. And I would like to finish here.
Thank you, Kabir. So today I'll be discussing how the New York Stock Exchange managed orders cancellation during the 2015 trading halt and which orders type were most impacted. When the NYSE suspended trading at 11:32 a.m. due to a software glitch, they took several key actions to manage outstanding orders. So first, the exchange invoked the clear erroneous execution rule. This allowed them to cancel trades that were executed at the abnormal prices due to the technical issue, practically those made just before the halt. Next, the NYSE canceled all outstanding orders on their books. This includes market orders and auction-only limit orders that were set for the opening auctions. This action especially wiped the slate clean to prevent any unfair executions when trading is. However, there was an exception to this cancellation. Market on close MOC and limit on close LOC orders that were already being entered before the halt were retained. These orders couldn't be cancelled and were kept in the system for the eventual market reopening. To maintain market stability, the NYSE also restricted new MOCs and LOCs orders, especially they didn't allow new orders for this type to be entered on the same side as an existing order imbalance. These measures were taken to prevent exacerbating any buys or sell imbalance before reopening. So let's now look on the orders type were most affected by these actions. Market orders and auction-only limit orders were significantly impacted as they were all cancelled when trading was halted. MOCs and LOCs orders were affected in two ways. Existing one couldn't be cancelled, potentially exposing traders to unexpected market conditions upon reopening, and new ones were restricted, limiting traders' ability to participate in the closing auction as they normally would. Orders involved in the opening and closing auctions were generally the most disrupted. So this highlights the vulnerability of these crucial daily market events to technical glitches. So in conclusion, NYSE auctions during the 2015 trading halt demonstrate the complex challenges in managing a major market disruption. They had to imbalance clearly problematic orders, retaining necessary liquidity for reopening and ensuring a fair and orderly resumption for trading. This event underscores the importance of robust system and clear protocol for handling unexpected technical issues in our increasing electronic finance market. So handing over to Devas. Thank you.
Thank you, Casey, for helping me out. And Professor, right now I would like to explain the cost to the enterprises which they have spent in order to rebuild the entire working system back to the normal. So when you talk about the cost, it's not about the fees and the commissions which they have lost and the traders, but during that period of 3.5 hours, there is a reputation loss also, which has costed them more than the cost of real money, because the real money could have been there, they can earn it any day other day, but the reputation loss which has made the loss of the trust amongst the people has cost them more. Besides that, the opportunity cost if the traders listing shifted elsewhere, because there might be chances that the traders will shift to another exchange exchange facilities. Regulatory scrutiny and potential SEC fines. So there are possible chances that the fines would be implemented over them because of the halt, and there are many penalties could be involved in this. So it's not just about the money they have lost, but in order to rebuild, the operational cost was also immensely during the process, because they need to reboot the entire system. They need to make sure the data is safe and sound. They need to back up everything. So it has cost them a lot. Now I would like to continue this again in the next slide, regarding the how they could have betterly prevented this, and in the future how they could better prevent it. Future prevention measures and taken. Upgrading its technology infrastructure for better life. So regular updates would be best in order to keep it safe and secure. Enhance real-time monitoring and diagnosis capability. So regular diagnosis and analysis should be done by, and monitoring should be done by the people and the security, strengthening the backup and disaster recovery procedure, so that the backups will be safe and secure over the premises, and they can rerun it the backup, and they can fetch it anytime during certain kind of situation. Disaster recovery procedures will be faster if they have better backup plans, increasing the frequency and rigorous of system testing and simultaneously. So frequency regarding the, I would say they should be having the regular drills regarding the certain situations, that if this happens, then they have the certain plans in order to implement the things faster, and they should be having the plan regarding the prevention, and beside to implement to boot up the system again. Improved communication protocols and staff training for effective issues. As I said, you could have user drills so that everyone will know what to do in certain situations. Thank you. Now I would like to forward this to Ayush and he'll explain more.
Thank you, Devash. Now let's talk about the key takeaways from the NYSE trading outage in July 2015. The outage highlighted several important lessons. First, we learned the need for resilient IT systems. The failure was caused by a software update that wasn't thoroughly tested, emphasizing the importance of comprehensive testing before implementation. Second, the incident showed the necessity of robust failover and disaster recovery systems. Having backup systems that can quickly take over during a failure helps keep operations running smoothly. Third, it underscored the need for strict change management processes to prevent configuration errors. And lastly, the outage demonstrated the importance of maintaining adequate redundancy in IT systems to avoid single point of failure. Multiple backup systems ensure continuous operation if one fails. Now, moving on to the next slide. So, the next slide is the references. For our case study, we drew references from several reliable sources, which consists of Drew Harwell's article in the Washington Post detailing the NYSE's resumption of trading after the shutdown on July 8, 2015. CBC News' report explaining that the NYSE glitch was due to a software update. ABC News' comprehensive overview of the factors behind the trading halt, and The Guardian Live's coverage on July 8, 2015, providing real-time updates on the situation. All That was all the references that we used, and also we have ensured that all the information is accurate and properly cited. If you have any questions or need further clarification, please feel free to ask us as we proceed. Thank you.